Harmony Capital Group. We're a direct lender, and we fund deals nationwide except North Dakota, South Dakota, and Illinois. We offer private and hard money loans nationwide. Basically, if you want to learn more about our programs, we have fix and flips, bridge loans, short and long term rental loans, 30-year or DSCR loans, cash out refinance rental loans, adjustable rate mortgages, fix and flip both for acquisition and bridge for multifamily, portfolio loans, new construction, mixed use, and commercial real estate. On fix and flips, our website is pretty easy to navigate. Basically, here's a brief explanation of a fix and flip loan, and then that we offer up to 90% of the purchase price and 100% of the renovation costs. And then terms are always going to be based on your credit and experience, and that's for everybody. Rates start at right now, as of May 13, 2022, at 6.99. Like I said, we can offer up to 90% of the purchase, 100% of the renovation. The minimum purchase price on any property is going to be 100,000 minimum FICO. And then what do we offer? It can be a single family residence, condo, duplex, triplex, fourplex, and when you jump into multifamily, it's 5+ units. We can do up to 75 loan to value or up to 80% loan to cost, whichever is lower. And then the terms are 6 for 24 months, and these are interest only payments. We also have bridge loans. On bridge loans is basically a very fast way to acquire a property. Let's say you want to buy a property and you have no rehab involved in there, then you can do a 12 months interest only payments bridge loan with no prepayment penalty. We can do up to 80% of the purchase price. And then rates start as of today at 7.99, up to 80% of the purchase price, minimum purchase 100, and then up to 12 months, and then single family, condo, duplex, triplex, fourplex. When we jump to short-term rentals, which are very popular right now, or long-term rentals, it's a great way that investors are piling up properties and using them for passive income. This is not financial advice. And then, like I said, we have either long-term or short-term. Basically, the rates are the same. When it comes to short-term, then there's some different requirements, but basically no seasonal requirements. And then the properties don't have to be rented. You can give us the projected rental income on those. When we jump to 30-year loans, 30-year loans go to it's a pretty big. You can do either a 30-year finance, fixed rate, cash out, or term refinance. Terms are the same. The only difference is that on term and rate on term, it restarts 6.99, and then the LTV up to 75, and the other two is 80%. Minimum purchase on all loans is a multifamily and mixed use and commercial start at 100, and then it applies to all these properties that we have here. And then you can either do long term, short or long term, or if you're going to pay off, let's say a rate of term, you got a fix and flip loan and you want to get from under it, you can use this loan to pay it off. And then this is for acquisition, you already own the property, or you want to pay an existing loan. No seasoning requirements, 6 months, and no seasoning requirements. And then all these loans are properties don't have to be rented, and then they're all fully amortized. When we're jumping back to adjustable rate mortgages can be either 5, 7, or 10 years. They can either be amortized at 30 years, or they can be principal interest only payments for 5, 7, 10 years. What that means is that for 5, 7, or 10 years, there's one interest rate set, but after that, then the rate will change. We don't know what that rate is going to be. We just know that after that term that you have decided, 5, 7, or 10, the interest rate will change, and it's based on the market. We can do 6.99 starting up to 75 loan to value. Again, 100%, 100K for Purchase price minimum 650. The type of properties we do that, and then there is a prepayment penalty for 5, 7, and 10. Meaning that if you try to get out of the contract before the 5 years, 7 years, or 10 years, this is the prepayment penalty what you're going to be paying: 4321, 4321, or 54321. Meaning that percentage on the first year, second year, third year, fourth year, and then so on. All these loans are made for acquisition, and then it can either be interest only or fully amortized. When we jump to multifamily, we have two loans for multifamily. Multifamily can either be a fix and flip or a bridge, meaning one is an acquisition, straight acquisition, no rehab involved, and the other one does have rehab, meaning that we can do up to 90% of the purchase price and 100% of the renovation cost. And then the terms are 12 to 24 months always, and then the minimum, it's a 5 unit, minimum is 500,000, minimum price per door is 100,000. And it's always case by case. And then, like all loans, terms are always going to be based on your credit and experience. When we jump to portfolio loans, we have two loans here. One can either be an acquisition, or the other one would be that you already own a property, you want to cash out, or you want to refinance. Rates again, across the board 6.99, and then up to 75 loan to value or 80% loan to cost, whichever is lowest. And then this is 5 units plus when it comes to portfolio loans. Again, minimum price is 500, meaning minimum price per door is 100,000 per door. FICO is higher here, 680. This is the units that we can do. When we put $75,000 here, meaning that we can go as low as $75,000, but it's a case by case. And then when you're talking about DSCR loans, which is debt service coverage ratio, meaning that for every dollar that you pay towards the loan, you must have for every dollar at least 20 cents left over. That's how we underwrite the loan. And then these loans can be 5, 10, or 30 years. Again, you can either be a fixed rate or it can be a amortized, adjustable rate mortgages. When we go to new construction, a lot of new investors like you guys are doing new construction deals. There is a caveat on this one. You must have experience if you're applying for a new construction loan, because it's not the same doing a fix and flip where you changing carpets, painting walls, changing an AC unit, and maybe redoing the kitchen, versus when you do a new construction that you have actually to start from the beginning. We fund also the horizontal and the vertical build, and then you have to go through the permitting, all that stuff. So you need to have at least 3 heavy renovation flips in the last 36 months, meaning $100,000 or more per flip in renovation costs, or 2 new construction deals in the past 36 months. Of course, you can always partner with somebody that has experience. And then all these projects must be shovel ready. Okay? And then we can go to mixed-use properties. Mixed-use properties usually are properties that we want to see that at least 51% or more is considered residential. What is a mixed use? A mixed use is something like that. You have residences on the top, and the bottom are commercial. We've seen these a lot. Usually they have either a fast food or convenience store or pharmacy, one of those things. And they're pretty good. Again, we can do up to 75 loan to value. That's the max we do on all commercial loans. Minimum, again, is 500,000. That's it. And it says 5 million, but we can do up to 20 million. Minimum FICO 660, and these loans are for 30 years. When we go to commercial real estate, we can do office buildings, retail stores, warehouses, self-storage, automatic repair shops, and hotels. We go to hospitality. Again, we can go up to $20 million, and then we can do up to 70% loan to value. Again, minimum loan request is going to be 500,000. It says 5 million, but again, we can go case by case. We can go to 20 million, and then it's a 30-year fix. Hopefully, this has we've gone over our loan programs, and you're more than welcome to go to our website and browse them. And if you have any questions, you can always reach out to us. You can even book an appointment. Just click on this link, and you can make an appointment, and we'll give a call and go over your loan scenario. We're always willing to do a loan scenario for you guys. If you are ready to apply, you just go apply now or request terms to go. And if you have general questions, you can always go to a glossary or a fact, and then there's a lot of information there that can work with you guys. Okay, thank you.